Hello everyone, welcome to this week's weekly market view for Monday the 2nd of September 2024 to Friday the 6th of September 2024. My name is Vishal. Let's get started. All right, so it's a new month now. Today is the 2nd of September and we are going to deep dive down into the index analysis first. So let us kickstart with the Nifty analysis and let us try to understand how the last week unfolded. So in the last week, we had this level of supply. And eventually the market did break this supply zone. And what it has done is that it has not given yet a pullback yet. So usually when resistances or strong levels are broken, they tend to possibly retest. We could argue that, this could be a break and a retest and then the move up. But I do feel that now the important levels or the key levels on the Nifty are sitting right here. So we have a level of demand which is sitting closer to this 25,000 handle. And currently we have the highest call open interest at 25,300, where we are seeing a little bit of profit booking coming in. So right now, in the coming weeks, any move or any retracement or any pullback to the downside is probably going to create more upside on the Nifty because there is no supply and Nifty is making all-time highs. So we would expect to see the market to be a little range bound now between 25,500 to 25,000, right? Right now, we are still taking a little bit of resistance at 25,300. But I think that there is still more upside for the Nifty, and we may go and we may start moving towards 25,500 after we show a little bit of correction. Let's move on to the Bank Nifty. Unlike the Nifty, the Bank Nifty and majorly other indices are also struggling to make all-time highs. In fact, today also we can see that Bank Nifty has moved into this area of supply, and for the past few weeks have not, changed this level yet. We are still struggling to cross 51,500. So 51,500 still remains a very, very crucial level for Bank Nifty. However, we are also seeing a little bit of a support now created at 51,000 level. So in the coming days, we might see the price to move slightly more sideways to a bearish perspective on the Bank Nifty with a strong support at 51,000, and currently it's strong resistance at 51,500 for this week. Let's move on to the Nifty Financial Services. The Nifty Financial Services did move considerably strongly. And now we can see how the price has gone deep inside this supply zone. So I'm going to remove this supply zone for now. It could play out still, and we could still see a little bit of a move to the downside. But however, now next the key area of interest is going to be this rally-based drop gap area of support. And this also has a nice confluence of the 23,800 high open interest as well as the 24,000 levels. So there is a possibility now that Nifty Financial Services might push to the upside eventually, and then probably start retracing to the downside. We can see that there are new levels of demand created here, but because we are very, very high on the curve, preferably it will not be the right thing to go long very, very close to higher time frame supply. So any kind of a bigger corrective move then longs can definitely be initiated. All right. Let's move on to Nifty MidCap. And Nifty MidCap has remained the ultimate beast, to say so. Here we can see on the daily chart today, we have a very, very strong bearish candle. Also today being the MidCap expiry, things tend to get extremely volatile on expiry days. But as you can see here on the daily chart, we have this new level of demand, which is created over here. You can call this either a rally, a base or a rally, or you can even call this as a drop base rally. So there is a possibility that in the coming weeks, we might see a little bit of a retracement to this level of demand, which will then probably help the price to move further to the upside. Let's move on to the Sensex now. And on the Sensex, we have broken this level of supply, very, very similar to the Nifty. And very interestingly, the levels of demand also that Sensex has created on its way to the upside are these key levels here. We have one level here, and we have another level of demand sitting right here. So it'll be interesting to see how does Sensex react once the price comes here. We have a support level here, 82,000. So we might expect to see price retracing back towards 82,000, where 82,000 will act as a strong support, and then hopefully the market will keep on continuing going up, unless and until, of course, there is some kind of a bearish news in the market. Let's look at Bankex now. So again, Bankex, very similar to the Bank Nifty, is struggling. Within this area of supply, we have nearly two levels of open interest lined up here. But today being also the Bankex expiry, one needs to be a little careful, because again, these open interest levels are likely to shift either to the upside or either further to the downside. However, for now, what we see on the chart is what we are going to be looking at right now, and we are in a supply zone on Bankex. So we will like to see how does price respect the level at this gap, which is this rally, base rally. And then the other level of demand is sitting right here, which is the closest level of demand from current market price, also lining up with a 57,000 put open interest level. So let us see in this week what happens. And markets are evenly poised. All right, now let's shift our focus from the indices to the heavyweights. So let's first start with Reliance. And on Reliance, I have these key levels of demand and supply already plotted on the chart. Anything in the middle probably doesn't interest me in terms of price moving up or down. So these are going to be the extreme levels, 31.49 to 32.21. Once price gets in here, we expect to see Reliance, either selling off, or you can call it or trying to give it a little bit of a corrective move. If price doesn't do that, and if price suddenly starts moving down from this level itself, then a key level of demand will be this 28.69 to 28.40. Okay, so before that, Reliance has to break the 3,000 level on a closing basis to create more bearishness in the market. And if Reliance wants to push to the upside, then any close about 3,100 is going to be crucial, because if that happens, then there is more likely that Reliance will push to the upside, which will again fuel the move in the Nifty and the other indices as well. Let's move on to HDFC Bank. And HDFC Bank is also just consolidating. It has hit this level of demand. I've been, continuously saying 1,600 is a strong level. But the moment the price gets to 1,650, we are seeing a little bit of a sell-off coming in. And in fact, even today, we are seeing this. So for the timing right now, because Bank Nifty is also in supply, HDFC Bank is also in supply. That is the reason why the move in Nifty is also getting a little stagnated at the moment right now. Once Bank Nifty, Finnifty, and all the other indices start moving together, then we are going to see even stronger moves coming in the Nifty. So right now, if you look at HDFC Bank, the view is slightly bearish to sideways. But once price comes towards 1,600, it will be interesting to see whether HDFC starts moving up again to the upside. If we expect to see a move in HDFC, the move is going to be definitely above 1,700. Right, so keep a close watch on these areas here, 1,700, and any break below 1,600 will probably create more bearishness on HDFC towards the 1,500 line. All right, let's switch gears now from the indices to the commodity markets. So let's load all the commodities here quickly, and let's wait till the commodity charts load up. All right, so let's start with gold. And since last week, gold has given a very, very strong rally to the upside. Now, if you look at the intraday charts on gold, especially the 240-minute chart, so there are these two key levels of supply that you want to keep a close watch. You have this level on top of level over here. This is key level of supply. And then just below that, we have another level of supply. Markets are still to get there. So it'll be interesting to see how the market reacts. And then just above that, you have another level. So it's actually three levels on top of each other. And of course, the most extreme level is the one at the top. But it'll be interesting to see because as you can see over here, prices have consolidated just before the level of supply, right? And usually when that happens, prices tend to move a little bit more or slightly more deeper inside these zones. That's why I have covered all the three levels to see. And I feel that it's most likely that probably we will get a reaction from the level in the middle or the level at the top here. Okay, but let us see whether that happens. Prices could also just touch the first level and then start turning down. But whenever this consolidation happens, there is always this strong push to the upside. Right now, the open interest levels, however, are suggesting that price is going to face a little bit of a tough time in crossing 72,000 because that's where the highest call open interest is. And then we also have the second highest put open interest at 70,000 odd lengths. Okay, now we do have a level of demand. Again, it's a level on top of level, very, very close to this area as well. So this is what we are going to also highlight, right? And we have also this put open interest level. So it'll be interesting to see now how gold reacts if it hits this supply zone, whether we see a strong sell-off or if gold keeps on coming down and then comes and hits this 70,000 handle and then starts to push again to the upside. Let's move on to the next commodity, which is silver. Today on silver, we are seeing a little bit of a gap down. Let me just refresh the chart here. And what is interesting to see is that we are coming closer towards this area over here. Let me just mark this level a little correctly here. So this is your level of demand, drop, base, rally. It is already tested once, and then prices have moved strongly to the upside, removing this area of supply. It will be interesting to see now how does silver react if it happens to come to 80,000 level. So we have gold also more or less coming closer to the 70,000 round number, and we have silver also coming closer to the 80,000 round number. So it will be interesting to see whether more buying comes in once price gets to this 80,000 odd level on silver. If price does start giving us a bounce from this 80,000 level, then we would expect to see our first target at 85,000 and then at 90,000 respectively. All right, let's now move on to crude oil. So on crude, we are just moving between this demand and supply. The moment we come closer to the 6,100 handle, we are seeing a bounce coming in. So I'm expecting crude oil to be range bound, more or less between 6,100 on the lower side and 6,500 on the upper side. So nothing much to say about crude right now. It's just range bound on the higher time frames. And last but not the least, let's have a quick look at natural gas. So let's load the chart of natural gas. Let's save this layout here. So let's start off with the daily chart of natural gas. Now, natural gas has been in a very, very strong downtrend. For the past couple of days, after it has given this gap up, it's very interesting to see that the prices have switched to the upside after a very, very strong move to the downside. So very, very close to 170 will be possibly an area where prices could bounce. But if the 170 level still fails, then 164.57 to 157 will be a key level of area of demand for the prices to come down and then start moving again up towards 185, 190 and 200 levels. So this is the demand and supply analysis for commodities. I hope you enjoyed this analysis for this week. If you have any valuable comments, please do mention in the comment section. If you like our analysis, please give your valuable feedback. We hope that you have a great trading week for this week. Until then, see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.